Hello, everyone, and welcome to This Week in Games 308, where we have lots of game industry news to talk about, but really we're going to talk about VCs all day. Actually, here's what we're going to talk about in summary. On our corrections section, if we make it out of that section today, I will be surprised. We got a lot of feedback on Kress's VC talk from last week, so we're going to go into that a bit more. Crunchyroll is funding games in their Netflix-like service. MTG acquires the company behind Raid Shadow Legends. Royal Kingdom has a new launch date, and it's the end of November. I'm sure Laura is thrilled about that one. And then Q3 earnings have come in really positive for the game industry, or many of the publicly traded companies, unless you're Ubisoft or Unity, I think. Everyone else had a great Q3. So, hi, I'm Jen Donahoe, strategic marketing consultant at Jade Inferno and Beta Hat. And today we have...
Yes, chef. Phillip Black, Game Economist Consulting.
This is Eric Kress, principal of Gossamer Consulting, screaming at the clouds.
Mishka, a blogger, podcaster, former game maker, surprisingly busy consultant, angel investor, and founder of Deconstructor of Fun.
Awesome. So, Mishka, do you want to kick off our banter section?
Yeah.
Because I think you have a Candyman reference.
Yeah, so I just came from a run and I was listening to TWIG just before we recorded this one. And Moritz was said more than 3 times, which is when you do that in one episode. You say Moritz 3 times, he will come in the following episode. So Moritz has confirmed we will be filming an on-site episode during the Slush Week, and we'll address some of the criticism shared by Mr. Eric Kress.
I can guarantee you he ain't going to say jack shit, right? So, I mean, the fair interview at Slush with, getting wasted, that's not going to do it, right? So, bring it.
Yeah, well, talking about getting wasted, well, actually, the opposite of getting wasted. So last week was Google's Move event, and this time around, it was in Abu Dhabi. Chris, were you on the last one in Dubai?
Oh, yeah. I did the last one. Yeah,
it was apparently a really fun and cool event. So now it was my turn to, enjoy the fun. So this one in Abu Dhabi, venue was fantastic. If you watch UFC as always a show in Abu Dhabi, and they're always at the W Hotel, and I'm a huge UFC fan. So it was kind of weird to be around that hotel where I watched so many of these YouTube shows as they're getting ready to fight. Now I was walking the hall. So for me, that was huge. But it was this really cool hotel, which the Formula One track goes through the hotel. And people, you can rent out a Formula. I mean, it's not the Formula that they drive, but you can, normal people will renting out, easier version of a Formula. It was a pretty crazy hotel. Anyway, good people, great venue. The fireside chat, I was now hosting a fireside chat with Petrovic. He was talking about launching new games in 2025. So interesting stuff. Mr. Peter Levin was there. He was doing a fireside chat with Luis de la Camara. They were discussing the importance of building IPs in gaming. I do have to say, one of the podcasts that I would like to do on our show is with Tobias Knope. He had a very interesting Google presentation. He's from Google. Very interesting presentation about Gen Z and a lot of market insights into this generation. He had this big counter that's now probably 416 days until Gen Z becomes the number 1 spending audience on mobile devices. So very interesting, fun stuff. And of course, folks from Play were also there. And then they have this Abu Dhabi Creative Hub, which is essentially a complex of buildings with entertainment and also gaming companies that they have located there. So brand new spaces right next to the Etihad Arena. Again, if you watch UFC, you would know what Etihad Arena is. But it was really cool. They had space for gaming companies that a lot of gaming companies have relocated. I think there was 40 gaming companies. And everything was Razer. So it was clearly somebody was hey, how can we make this really cool? And what says gaming more than Razer everything? So cool place. Recorded 3 podcasts from there and probably releasing sometimes this year. So that was my trip, being the Kress of the UAE now.
Your pictures were hilarious.
Yeah,
which
Jesus.
one? Oh,
the bromance with Lewis, dude. Jesus, you look like you guys were walking on the beach in sunset, dude. What was happening with that?
He was taking a photo. He was trying to take a selfie, and I was let me come. I actually kind of photobombed him and made it more sexy.
You guys are a gorgeous couple. Absolutely gorgeous couple.
Yeah.
So,
Well, what happens in Abu Dhabi stays in Abu Dhabi. So
This podcast is brought to you by AppsFlyer. In today's digital world, understanding your app's journey from discovery to download is more than just insightful, it's essential. Enter AppsFlyer, the leader in mobile attribution and marketing analytics that allows you to measure the full potential of your marketing efforts, making every ad dollar work smarter. With AppsFlyer, that's your new reality. Dive deep into data-driven insights that reveal exactly where your users come from and how they'll interact with your app. AppsFlyer, where your app's potential meets performance. All right, what are you shilling, sir? I think we have lots of cool newsletter stuff going on.
Yeah, so Amit Chand posted a really interesting analysis. It's called The Sweet Art of Feature Adaptation. In other words, how to borrow with pride and make it work for you. So Amit Chand is really focused on puzzle games and different live ops. And so in this article, he was talking a lot about different games taking different features from each other and how they modified to make it work. And it was funny because Javier Barnes, who's been on the podcast multiple times and written a lot of times, was like, oh, cool. You're showing some of the features that we worked on where they lived probably from Dream or something. Cool stuff. And then final one for me is like the Supper Club. We're recording this now on Thursday. It's next Monday, but there was only 30 places for the Supper Club. So naturally, some of the people will not get their seat. But if you got it, please come. If you can't come, please let us know so we can get somebody else in. So that's about it.
All right, let's move into corrections. Who wants to go first?
Well, I think we have to first talk about the Riot numbers that were revealed, I guess, in quotes. What was it, two or three episodes ago? There was this idea that U.S. Western revenue for Riot is only about 3%. Maybe that wasn't the exact number, but it was something really, really small. When this was posted on the Slack, there was a lot of disagreement whether or not this was real, including real Riot employees with authority who I would personally vouch for, saying that this is not the right number, that this is too low. So I don't know what the real number is, but 3% seems too low.
I don't know what the fucking real number is, right? But three different people, one person came up to me specifically and said you would have no idea how low the number is in the US. And then two other people basically confirmed that it is very low, right? So the 3% is a number, right? But for the Riot guys to say, no, it isn't, and not really real, but do any real numbers, dude, that's not going to cut it, right? So my gut tells me it's probably, in the 5 to 10% range in the US, but even if it's that low, it is so significantly
crazy.
Much
that doesn't change the takeaway.
Than people, yeah, that's all that matters is the takeaway, is that the fucking, this business is very, very, very small in the US, right? And it's like, the fact that I didn't know this before now is just shocking after all this time. So anyway, I think this just confirms that the US market is much smaller. Because otherwise, if they really had a big number, they would just say, it's like 20 to 25%, you idiot, right? That's what they should be saying. Instead, it's probably like 5 to 10%, depending on the month, year, promotion, right? Or what's happening in fucking China, like whatever, dude. It's a low number. So that's part of the reason that this mobile market doesn't even exist in the West, in the US anyway.
So that means the East is supporting Honor of Kings and Riot simultaneously. Both of those products are coexisting and monetizing from that same
one's
base.
Mobile, one's PC, yes. Right? Honor of Kings is not on PC, is it?
No, it's different platforms.
No, but it's still the same players it's monetizing. It's monetizing Eastern players. That's where all the money is coming from, whether on PC or on mobile.
Korea and China, yeah.
That makes Riot's decision not to do mobile look even stupider. How could you not understand the audience that you're appealing to? If they were making a game for the East, of course you should have made Wild Rift like 10 years ago.
Well, that's why Honor of Kings exists.
Right. I just think it makes that decision even more painful if they knew this. If they knew who was paying the bills, of course you have to understand your target market and what their interests are. And it was mobile.
But you have to remember that Riot didn't know how to make mobile. It didn't want to make mobile. Back then, when they were first asked before Honor of Kings was created, mobile wasn't, the HD product that it could be. The phones weren't quite ready for that type of thing. And so, listen, I agree. They probably should have figured out how to do it sooner. But Honor of Kings came in and crushed it and literally crushed it. So anyway, let's talk about Supercell. They are not actually shutting down their North America location at all. It is merely an office move. They're shutting down their office. It's just a work from home situation, just like with many companies is like no one can afford downtown San Francisco real estate.
If I said that they were shutting down North American operations, that is not what I meant. I meant that they were shutting down the most beautiful office people have ever seen in the world in San Francisco. And fine, I don't know where they're moving. Maybe they're moving to fucking Oakland. I don't know. Who knows?
Probably not Oakland these days.
All right. So my big correction from last week, and the only real correction that I'm really offering, is that clearly there have been some great exits from gaming on the VC side. Like, I don't want to suggest that there haven't. Superplay, for instance, is an amazing outcome, right? I was caught off guard by Mr. Phillip Black for two reasons. One, I really didn't want to focus on why VC doesn't make sense in gaming. All I really wanted to focus on is the perverse incentives around VC are not aligned with founders in general, right? That's what I was trying to just focus on because it's a very complex topic, as we all know. And two, and this is where Phillip, mobile was out of scope to begin with because the context of the whole thing was AAA investment, not mobile. I have said consistently that mobile is a great VC type investment because it can scale over time, right? And maybe less recently because of fucking IDFA and the challenges of bringing games to market. But that is the type of business that VCs make sense. And what I have said in the past is that when mobile became difficult, all these VCs started turning to AAA, which never made sense for venture capital investment. So I want to be clear. Phillip kind of tripped me up, but I sound like an absolute moron on the podcast last week when I said that. And I do want to push back on Dream a little bit because actually Dream could be an example of the same type of thing that I was saying, is that all these rounds of financing are not success, right? When you're at a 2.7 billion valuation for a private company, that's actually a challenge, right? Because there is very, very few exit strategies for Dream at this scale, right? IPOs are off the table completely at this point, right? Particularly for mobile gaming. Acquisition, they've priced themselves out of many companies that might want to acquire them, right? So now it's like they're too big for liquidity, right? To some degree. So if that's their goal, they have missed kind of a window for liquidity at this level of value, right?
Can they return cash directly to shareholders or directly to investees? Can they pay out dividends or something of the sort? Because they're just generating free cash flow, right?
Yeah, 100%. But that's not the VC model. That's the whole point.
Totally.
Yeah, that's the whole point. But if their goal is to run a successful private company, then they're in great shape, right? I just want to reiterate, huge private rounds are not the end game. They do provide liquidity to founders for sure, right? That's part of these deals is they get secondary shares. They sell their shares on these rounds. But what about the rest? All the other employees, the VCs, and ultimately the LPs, the pension funds, the endowments, the insurance companies, the family offices, the sovereign wealth funds, right? They're all left holding the bag because there's no liquidity event for those guys, right? But to be clear, this is an amazing story of growth and growing scale and profitably, with these Dream guys. And, I think it's a good bet, but is it a great venture investment? It's unclear, right? And this is clearly not a AAA console PC business. Make sense? Or am I just screaming at the clouds?
Yeah.
No, it makes sense.
Could you explain why you look at mobile differently than AAA? Is it really just the UA piece means velocity of scale can be so much higher with capital? It's slower to grow a AAA HD game, which is why you look at them differently. You look at mobile as more as a traditional software as a service company, and HD is more creative driven.
Yeah, historically, these VC investments have been trying to invest in the early and build scale, right? And with mobile game companies, you kind of do that with user acquisition and scale it over time. It's a live service game. It's basically a SaaS business by definition, almost, for a free-to-play mobile game. But for console games and PC games, it's a hit-driven business. The product life is very, very, very short, right? 80% of your revenue is driven in the first 2 months of its launch, right? They have huge, long dev cycles, 3 to 5 years, costing hundreds of millions of dollars, right? And then when the game comes out, then you have another 3 to 5 years. This is just not a VC business, right? Fundamentally, it's hard to scale. One game success doesn't mean the next game is going to be successful, right? And obviously there's shifting landscapes, consumer preferences change, hardware. It's a fucking creative industry, right? It's really hard to underwrite a creative industry with venture capital money. That's kind of fundamentally why AAA gaming doesn't make any sense.
Yeah. I have a couple of things. I just listened to it. I think it was a great round. I especially like the Bugattis in French Riviera and hookers. That was those
hookers and blow, dude. I'm telling you, all these guys, all these big VCs, hookers and blow, dude. That's it. That's what their goal is.
I've met plenty. I don't know who you're talking about, but
no.
But allegedly.
Look, at the end of the day, they're doing it. They're totally doing it, dude. It's hookers and blows for the rest of their lives. You know, like they're making it. Right.
Again,
So,
have
good for
not
them.
seen it. Have been hanging out with VCs for quite a while. But anyway, so the one thing that you kind of missed there, in my opinion, is you talked about that the funds are not aligned with the founders because they're not looking for an exit. Like, there might be a truth to that to some extent, depending on the investment. But the element where the founders and the VCs are aligned is the markups. And especially, so by markups, I mean that when you invest, let's say I invest in Kress's game company, I invest 1 million at 10 million valuation. And when he goes to 20 million valuations, I have a markup, or 30 or 40. So the growth of my investment increases as the value of his company increases when he gets more investments and I do a follow-up investment. Anyways, when the value of the company increases, there are options for secondaries for the founders. So what I'm trying to say is there's a reason for a founder to push for a higher valuation as there is for a VC. Because in those instances, if it's a competitive round, the founder is able to sell part of their shares to the new investors that are coming along. And that allows them to do a partial exit. And the more markups, the more rounds you do. We've seen some of the founders even get family offices by the situation of like round D. So that's a perverse way where VCs and founders are aligned, but they're not aligned with LPs. They're not aligned with LPs.
Well, they're pushing the founders to align with the VCs by giving them secondaries. I mean, I was going to say, why not just give them a share of the fund, right? So now they care about the fund performance of your individual founder. Like, you want the other founders to exit too.
Never heard of this.
This is part of the
You've
disease.
never heard of secondaries? No. So actually, secondaries make a lot of sense. Let me explain to you where secondaries make a lot of sense. So previously, let's talk about like the startup land of Israel, where they had a lot of issues where founders were selling too quickly their startups rather than, riding them and IPOing them. And so the secondaries were really powerful in that market because they were able to, like Jen, you're running this business, you have an ad tech company, it's Jade Inferno ad tech, and it's like valued at 100 million. And you're like, why am I driving a Hyundai? I need a Corvette, and I also need an apartment and so forth. And as you raise the next round and now you're valued at 1 billion, you're able to sell part of your shares as your company value increases. And that allows you to exit to some extent. Now, when that happens, you're not itching to sell your company to get your first apartment, your nice car, your Riviera home and blow, as Eric says, but you're like more focused on building your company. And because your basic needs and everything that you wanted has been satisfied with whatever, let's say 5 million, you're like, okay, I'm good. Now I can focus on building my company and IPOing and getting it to like 10, 20, 30 billion valuation. That's where the secondaries come in. And they're actually a very powerful way of ensuring that the founders stay and lead the company.
Stop. This is part of the sickness. This is part of the sickness. This is not part of the cure, right? Yes, founders get liquidity, but that's not venture capital, right? Like, venture capital is exit events, IPO, sale, so that everyone benefits, right? Those are not mutually aligned incentives, right? That does not help LPs to give money to these
then give them
founders.
shares of the fund then. Give them shares of the fund performance then, the founders themselves.
Stop this with the fund performance. They can give them money and then they don't need to be invested into like 200 other gaming companies. When we're talking about secondaries, like companies like Supercell had secondaries that allowed them to do multiple, like 2 exits even after that. So it's not just out of gaming company as an example that has done secondaries before they got acquired.
I mean, in some ways, these are just total bribes to keep founders happy, right? To get some liquidity. And I already actually said this like 5 seconds ago, so I don't know why you're repeating it. But like, it is good for the founders, but is it good for the LPs, right? This thing is a private company forever?
I can say multiple companies that have exited at several billions that they received few rounds of secondaries
Which
before
AAA
that.
companies have launched?
AAA. I don't know AAA.
None.
I'm talking about
Zero.
tech and mobile.
Mobile, historically, yes, there were some great exits historically, but these rounds have gone too long and these valuations are too fucking high. And the market has spoken. And we're going to talk about these acquisitions at 2 times revenue, at 4.5 times EBIT. Like, You can't get a good exit with those kind of multiples.
I agree. All right. The market has changed.
So this is, again, you're talking about a symptom of the problem, not a solution, right? Give liquidity to founders, right? I want to wrap it with one thing because I think, Jeff Cohen made a good point, right? So the big risk to these bigger funds is that they need to see massive outcomes to get returns for their funds, right? So this will push founders to do things that are not necessarily beneficial for their company, right? Because they need a 10x return versus a 3x return, which would be fine for the founders, right? So putting it in context, for instance, like a company could grow to like $150 million valuation as a developer, right? And then sell to Scopely and get a good exit and, get some liquidity, et cetera. But the VCs are like, no, that's not good enough. A 3x return is not sufficient. We need a 10x return. Invest in a publishing arm, invest in multiple teams, acquire teams, grow, right? And by that time, they become such a big behemoth that's been funded by these guys like at insane levels that there is no liquidity event for anybody at that stage because they're too big, basically too big to liquidate, as I would say. So all this is a problem like for the ecosystem, I think, ultimately, but only time will tell, right? Interest rates are going to come down in theory. Fucking Trump is, off into the moon, right? Maybe they're going to get rid of Lee Khan, who's been a real hindrance to M&A in the market.
Well,
maybe the IPO market opens up and all these things are solved.
Conservatives love her.
But anyway, we shall see. I look forward to your milquetoast interview with Mr. Moritz.
My milk
next
toast.
week.
What's a milk toast? That's a new term. I've never
Vanilla.
heard.
Generic.
Oh, vanilla. I got it.
Nothing's going to be said. He's pretty PR trained,
He is.
Yeah, no, I think we should schedule a Kress Moritz cage match podcast.
Mm-hmm.
I think that would be a lot of fun. But Mishka, you take the first shot and then we'll set that up.
I'll do something that they can actually publish because Lightspeed has to approve these podcasts.
Oh, God,
of course
they do. There we go.
It's
Milquetoast
a financial institution.
101.
They can't just let people on a rant without procurement. Like it's a multi-billion-dollar asset management company. So let's be clear.
So a few things going on. Overall, Crunchyroll has surpassed 15 million subscribers this year. They have kind of like a Netflix, subscription service for mobile. So they are looking for a diverse range of games for what they call the Crunchyroll Game Vault. It's a library of premium mobile titles for their mega and ultimate fan subscribers. If you think your game could resonate with an anime-loving audience, they offer funding and support for mobile porting. So another kind of service out there that is helping to support developers and funding. So they have a website, crunchyroll.com, and go to the games and look for Game Vault, and you can apply to get onto their service. Next topic, I thought this was really funny. So speaking of irony, Meta launches the irony of all ad products, ads that are optimized for games with ads. So they now have basically what we're calling the ad ROAS model. And so this is similar to how you optimize for certain in-app events. Now you can do this for ad impressions, assuming you have everything kind of set up behind the scene. So the in-app ad impression conversion event is currently only available for Android, hearkening back to Kress's IDFA yelling and screaming. And campaigns have to be created using the app promotion objective. So check that out.
Dropping next week.
Oh, all right. Well, there you go.
I mean, this is huge, right? I mean, doesn't this do a lot for hybrid and hybrid casual? I mean, should we be rushing to get Voodoo shares right now? Is Voodoo up on this news? I'm 100%
Voodoo?
serious.
How do you get Voodoo shares?
Oh, that's a good
who's
point.
going to sell them?
They're all private.
Yeah, Goldman Sachs is going to sell you a piece of their business.
Should they be doing selling their shares on a secondary market, Mishka?
I don't know. Goldman Sachs is their biggest investor, so I don't think they will allow that type of shenanigans. I think they got their secondaries. I think their last round from Goldman alone was 200 million, so they're good.
Honestly, it is a huge new ad unit for folks, and especially if you have any of your business that is ad optimized, it is something to look into, right away.
Let's track hyper casual downloads. Let's see if they change after this starts to get scale.
Oh, yeah. It might not actually be the downloads. Again, because it's optimized for the revenue, you might not necessarily see the impact in downloads and more in their... I don't think we'll be able to see it through Sensor Tower.
Yeah. Such a win for the game industry for hyper casual to get a second wind.
I mean, if ROAS goes up, they'll have more downloads though. It'll get reinvested in the business. Like we should see more downloads.
Heaven help us.
I mean, Eric, you call them cockroaches that like just don't die. I mean,
They
I
really
think I
don't
did,
die.
actually.
Yeah, they really don't die. I mean, they
Yeah,
die,
they're like,
but they're back to life. They just want to be resurrected. Like the ad people just can't stop. It's bullshit.
yeah.
So I wanted to talk about a fun rumor. EA's Andrew Wilson is on the list of potentials to be the next Disney CEO to succeed Iger. So I'm not sure that bringing in another industry CEO ever goes well. It didn't even go well at EA during the mobile versus PC days. So thinking back to my past, there was an EA CEO bake-off back in the day. And Kress, I was wondering, what would have happened if Mitch Lasky, the very awesome podcast Gamecraft, if you haven't listened to Gamecraft, I make no money by saying this, but it was like season 1 was awesome. So what would have happened if Mitch Lasky got the seat instead of JR? So Mitch Lasky was Jamdat, EA bought Jamdat, which was basically the birth of mobile at EA. And, he's all about distribution and disruption in platforms. Would EA have cared about mobile if Mitch had kind of kept it? Because both JR and Andrew Wilson don't give two shits about mobile. Their strategy is like, let's triple down on our big franchises, especially if it's called FIFA/FC. That's basically been the strategy. So I don't know if I co-sign the idea of a video game guy taking over. Actually, having worked at Disney and seeing how many different divisions, I don't know if that's a fit.
Was Playfish acquired during JR's time?
I'll ask the right people and come back with a theory. I do want to say something about Andrew Wilson. I'm actually torn on this one because I think Andrew Wilson leaving EA would be really, 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 really good for EA. So it's like, I'm like a little bit torn, right? So maybe he can go fuck up Disney. I don't know, right? Like the thing is that the investor community really doesn't like Andrew Wilson. They don't find him very genuine or honest about how he positions things. He's just like one of those really well buttoned down executives. So I don't think he'd be really well received on Wall Street for Disney, but I could be wrong on that front. But I do think it's time of change in management for EA. I think it's been time for a long time. So I just don't think Andrew's done a great job of consolidating into like 6 franchises every year and building the business and allowing the CFO to control costs. But there's been really no strategic investment, with the exception of
Glue.
Sorry, I'm blanking out. Respawn.
Glue.
But
No, Respawn was great, right?
This is an interesting thing that you said, like Wall Street doesn't like Wilson. What is a CEO that Wall Street likes?
Oh,
Elon
fucking Bobby
Musk.
Kotick, dude. Bobby
Bobby?
Kotick. Everyone loved that guy. Like the industry might have hated him, but dude, the guy did what he said. And when things were working, he basically just shut the fucking shit down, right? Like he was not messing around, right? And he made great investments, with King acquisition. Dude, I mean, the guy really almost flawless victory for Mr. Bobby Kotick. Anyway,
Interesting.
someone like that. Even Strauss, like, I think Strauss is far more straightforward about things. I think he manages the street really well. What other CEOs? Frank Chabot, I think that was well respected for what he did and well perceived by Wall Street once he took over at Zynga.
So to summarize, Wall Street likes a person that comes in with a strategy and then executes against that strategy.
Right. And is honest about when things are working and not working. Right. And
Got it. So no word salads like, yeah, okay, got it.
Again,
All right.
like when people are up there for 45 minutes during a strategy conference, an investor conference, and say nothing, right, in 45 minutes, like they don't like that.
If they have a McKinsey background and they're working on strategy. Like, do you mean that?
Yeah. One guy was saying like there should be an index of McKinsey clients. Like we'll get a McKinsey client list and you want to short all the McKinsey clients that are gaming and go long the ones that are not doing McKinsey.
So
that
like
would be
counter
a winner.
McKinsey ETF. Okay, got it.
McKinsey, the destroyer of interactive.
Well, we learned a lot about the big markets here. So think about that. You've heard of Heroic Labs by now, and we keep talking about them because you need every edge to be successful in today's market. Heroic Labs game stack is built like a brick house. You got the Nakama, their backend game server, Hero, their game development framework, Satori, their live op service, and last but not least, Heroic Cloud to provide massive scalability. Heroic Labs is a battle-tested partner, and their tech enables you to be flexible, creative, and scale for success. Focus on your game, avoid tech risks, grow your product with scalable live ops, and save a big chunk of cheese, all with Heroic Labs.
Step into the future of game monetization with Xsolla, the premier partner for game developers seeking to expand their reach and revenue. Xsolla provides a robust suite of tools designed to enhance user acquisition, manage subscriptions, and streamline payment solutions worldwide. Unlock new markets and maximize profitability through their customized, secure payment architecture and dedicated support team. Xsolla, powering game developers to achieve global success.
Let's talk a little bit about investments and divestments. If you hate VC talk, I think we're going to quickly venture into that. But basically, there are a couple of big news that came out. So MTG, Modern Time Groups, out of the fantastic, beautiful city of Stockholm, located in the Northern Europe with kings and queens. So they have acquired, Phil, this was for you. So they had acquired Plarium, a developer of global #1 mobile RPG Raid Shadow Legends, and through that, strengthened their mobile gaming position. Now, the purchase price consideration was $620 million USD. There were $200 million earnouts through 2028. Let's get to the beef of it. Plarium generated $613 million for the 12-month period. So meaning that they acquired this company, the upfront cost of the company was pretty much 1x gross revenue. It's not a big multiple.
No multiple. It's literally no multiple.
Yeah, exactly. It's like 1.0. Like that's scary. And then you're like, well, they're probably unprofitable. They've been investing so much in their growth, so hence that's the situation. No, sir. The company generated $137 million in adjusted EBITDA, so earning before interest, taxes, deductibles, and yada, 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 with an operating margin of 22%, which is pretty good.
I just have questions, Eric. Can you help us sort through why this was such a low price? I mean, we covered Raid. Raid has been doing really well. It's one of the few RPGs that has survived over time. You look at the Western market, it's outdone Strikeforce and it's outdone Galaxy of Heroes. It's on its own warpath. It hasn't had that slump that you see in a lot of squad RPGs. So they've asserted the dominance and kept a long-running live service. Merge Gardens does okay. Mech Arena is kind of interesting. It's scaling a little bit. Vikings is too minor. But they said those 4 games, including Raid, was 90% of their revenue. So it doesn't look like they have a ton of crazy growth vectors. But even just for a cash cow, I don't get this, Eric. Is there some skeleton in their closet we don't know about?
There are just so many things to talk about. First of all, yes, this does feel like a very, very low offer and a good deal for the MTG, right? To some degree, right? They're getting at least a reasonably profit, really solid game, and two or three others that are decent but small. But the 22% margins are relatively low given the scale and mature game. They must be spending a fucking fortune on marketing still for this game. Yeah. And this is partly, the whole web store thing. This is exactly what I've been talking about, the web store. It's like, dude, yes, I think probably 50% of their business on web stores, but this ain't helping them, it's not helping them scale. To be put into perspective, Plarium was bought by Aristocrat for $500 million in 2017, dude, before this game even came out, I think, right?
God. Yes. Yeah, before it came out.
So it's like the valuations have clearly come down dramatically. And I will say, let's put these multiples on all the venture capital investments from Griffin, A16Z, Lightspeed, and others, and we'll see what your valuation of your fucking portfolio is. Right? Let's do that and see what the LPs think. They'll throw up all over that, right? So if these are the exits that you can hope for, put this in your model, right? This is a bit scary. I know the earnout is another $200 million.
Yeah, but VCs have nothing to do with the investors have nothing to do with an earnout. That's for the staff. In almost every deal, the investors get paid out first because why would the investors be carried for an earnout when they have nothing to do with it?
You're right. We don't know for sure. Why did they provide so much information on this deal, by the way? I don't understand why that was required.
Probably Swedish law of being fair, transparent, and beautiful.
Kings and queens.
Kings and queens. That's the reason.
But isn't Aristocrat trying to do a fire sale?
This is the mystery, right, Eric? Is why this doesn't make sense on paper.
Let me try to think about this a little bit. So why is Aristocrat selling it? There's one reason. I haven't looked at Aristocrat's number. That's a casino, real money gaming company, real money casino. They could be that the multiples, as you said, the profit is only 22% for Plarium. It could be that the multiples are dragging down the rest of the portfolio and they're exiting mobile gaming altogether. So this would mean that Big Fish is on the chopping table. I forgot what other they have. It's like Pixel United. Big Fish is probably part of that. Like I forgot how they set up.
We already know kind of what's happening there. They're trying to divest outside of anything that has nothing to do with social casino, it seems, right? So they're getting rid of their casual group. They get rid of this core group.
Yeah.
Part of their strategy was to build a big mobile organization because the multiples were better, but the multiples are not better now. And so now they're trying to divest out of it, right? Yeah. And so this is, again, my point about valuations are out of control. These VCs are just investing in things that don't have that value and can never get exits.
Think about Plarium as well. Raid is made largely out of Ukraine. I remember they had over 1,000 people working on that game or something in that range, like a lot of people. Of course, Plarium headquartered in Israel. So you got developers in 2 conflict zones at the same time. Merge Gardens is here in Finland, safely in the armpit of Russia. So it's all good. But that's definitely has an effect on your evaluation. It has to. And then what was interesting is that the price was so low because usually in this case, like when you're selling such a good asset, like there should be other buyers.
I know
at play. And like, what happened? Like, is this like, think about it. This was the best deal on the table. This is it. Like,
where was Savvy? Where was Scopely?
I know.
Well, Savvy probably wouldn't acquire an Israeli company, let's be honest. And Scopely is part of Savvy. So let's take that off the table. Just, throwing out a whim here. But nevertheless, like there are other acquirers. There are the Chinese acquirers. There's everybody who would gladly take such an EBITDA positive company. I think they doubled the EBITDA or the run rate of MTG altogether. So it's good for them. Like MTG is largely owned by private equity. And I think this is a win for that company because yes, they doubled the EBITDA, they increased the cash flow. There's tech and deep expertise in live ops and marketing and monetization all go into MTG that previously had Hutch. I forgot what other companies. There's Snowprint is part of their portfolio and a couple of other ones. Like good studios, but this is definitely the crown jewel. And I think the biggest loss here, like Phil, you were showing some of the graphs here, but the biggest loss is for VCs because Plarium being such a good company in terms of revenue, in terms of what they've done, in terms of the IP they've built, when you get a multiple such low, like EBITDA multiple was below 4.5x. And then when you start looking at the tech multiples in 2024, the larger your EBITDA range is, the bigger the multiple. And so in this case, like if we're talking about ad tech, like it would be well over 10x multiple. If it would be, fintech, it's over 12, semiconductors 13, software development 12. So multiples in other businesses are magnitude larger than in mobile gaming at the moment. And this is quite scary for our industry as a whole.
Okay.
All right, moving on.
Oh, the last one. So actually there's 2 Take-Two news. So one is Take-Two is divesting from Chartboost. So Chartboost is being up to grabs. Now, if you remember, Zynga bought Chartboost back in the time where IDFA was being rolled in. It was like 2020, 2021. And it was the play together with that Chartboost and roll it. They will have all the data. So IDFA won't be a problem. And then they got acquired by Take-Two. So good on them. Now, Take-Two overall reported over 600 million in ad revenues, and Chartboost and ad revenue. The connection there is that Chartboost allows company to control ad placements directly as a mediation platform. So this type of a sale would likely lead to a significant payday for Take-Two, I assume, and it's likely to be sold to one of the incumbents. It could be AppsFlyer, it could be Unity, it could be even AppLovin. I mean, they for sure have a lot of cash at play. And then the chosen platform would gain increased ad revenue and user acquisition capabilities, potentially improving their competitive position in mobile advertising. And then the potential sale could reshape mobile ad mediation. If you want to read more about it, check out Felix Broberg's post. He had a blog post that covered this and the effect of this potential sale to the mediation landscape.
I don't even understand where their position is at this point.
It was considered a strategic acquisition back in the days, but probably did not resonate.
Sorry, just not to be negative Nelly and screaming at the clouds again, but like, yeah, when the acquisition happened, it didn't fucking make sense given Zynga doesn't even know anything about user acquisition.
It was part of the data. Like they were thinking that they get Rolik and that will give them a lot of data, and then they get mediation platform and they create a walled garden. They were reading mobile dev memo. They were listening to Sufra. They were like, we were going to build a content fortress. And that was their strategy.
Walled garden contract fortress. Fuck that bullshit. Like that never happened because they didn't have the tech or the will to invest in what was required. Not to mention like every other developer in Zynga were publishing their own games and doing UA on different accounts. Like they couldn't even consolidate their own shit, much less like, anyway, all right.
Zelnick looked at it and sold it.
Yeah. It was a dumb experiment that never made sense for Zynga. It could have made sense for other companies, but not Zynga in particular. But
it was a good
Zynga's
story. It was a good story.
It was a great story to tell, but it was bullshit. And I said that back then, and I'm saying that now, and it's clear. Right.
You stay corrected. I bet they will sell Stormaven as well. They acquired that one. You remember that one as well?
Oh, that's true. I forgot they have Stormaven.
They were building a content fortress, brick by brick. That's what they were doing.
They're trying to have first party data. I think AppLovin is also on fire. I didn't pull their Q3 earnings, but
oh my God, yeah.
Hockey stick.
Every time I think we talk about them, I say they're crushing it. I don't know how you can continue to crush it, and Unity is just, can't stay afloat.
There's no end in sight. Although one thing I did hear recently, and I need to get some understanding on this, is that the one thing that could have threatened them, and I've said this a million times, is any type of change to fingerprinting. And what I heard from some investment guys that there are two contingents within Apple, right? One is that we are going after privacy at all costs and fingerprinting is on the table, right? And the other contingent is like, look, we can't do shit right now because we're getting sued by every single fucking country in the free world, right? So it's like, we have to lay low and not fuck with this industry anymore until we can, right? And the complexities around implementing any type of IP stopping, given like, there's lots of other things that are required for IP tracking that are actually important for the function of the phone. So anyway, I really want to understand if this is inevitable or not. Yeah, I know the guy from Uptick basically suggested that is inevitable.
Warren,
and that is actually consistent with what I heard.
Woodward.
But the question is when. The whole point of this, that's the only thing that could really impact AppLovin at this point. Otherwise, they're just running away with it, So here we go.
AppLovin on the podcast in a week or two, probably 2 weeks.
Cool.
We recorded. It's been approved by the corporation, so we'll get to go. Another news from Zelnick. So he also sold Private Division. Take-Two's Interactive confirmed the sale of Private Division for an undisclosed sum as it drops the indie-focused publishing label to focus on larger projects. The company confirmed another party has already acquired not only Private Division label, but also its live and unreleased titles. I'm going to quote Mr. Zelnick. He said, "We are really best at these big AAA experiences. We have the biggest intellectual properties in the interactive entertainment business, some of the biggest intellectual properties in the overall entertainment business, and to make sequels to existing beloved franchises, as well as to create new hit intellectual properties is our mission." He could have just summarized it. We're selling Private Division because it's mice nuts. And that would have been it.
There you go.
Goddamn right. Goddamn right. Look, I think this is a great example of Zelnick doing the hard thing, right? And selling off these divisions that don't make sense for their core business. This is another blow to the small and AA and single A type games where there's no opportunities to publish these games because people are just not interested. It's not a good business, right? And you read articles about this all the time where, the single A, AA business is survival at best, right? And the market's just moved on to these big AAA releases. So this is an example of Zelnick doing his job, right? And making tough calls, something that Mr. Andrew has been just struggled with. And certainly Mr. Ubisoft. We're not going there again. We're not going there again.
Always. We can't go. So single A and indie is a hand-to-mouth business, right? That's pretty much how it functions.
Yeah, basically.
All right, moving on. Phil, Roblox?
Roblox Q3 absolutely crushed it. Eric, you've talked trash about this company, but it is just up across the board. In terms of daily active users, they added another 10 million quarter over quarter. So they went from 79 million daily active users to about 89 million active users. And that is 27% year over year up. They also are up across all regions. This is one of the things, Eric, you had pointed out last time we had talked, was that they had been slowing growth in a lot of the high tier 1 regions. But when I looked at least US and Canada, it looked like they were up in that region as well. So it's not just tier 3 growth. It looks like it's happening in tier 1 too. And the other thing we really needed to keep a look at with this company, which has been one of the storylines, is what's happening to costs, because their costs have been really high for a long period of time. Stock-based comp is really high. And so when you look at the cost of revenue, it is up, but the growth in revenue and the DAU is exceeding the growth in the cost of revenue, or it's exceeding the growth rate in the cost of revenue. So they are getting that under control, although I still looks pretty high to me. I seriously just don't know where you end up with in terms of growth for a product like this, because they must be reaching the ceiling. Like if you look at how many under 13 kids there are in the United States and Canada, it's 40 to 50 million. And they're reporting that they have 22 million DAU in those regions. So like they have literally half the population of kids that are under 13. Like where does it stop? They like keep seeming to pull like these rabbits out of a hat.
Yeah, I think there was some one-time thing that happened this quarter as well, which kind of juiced their numbers. I would just say buyer beware on this stock, just in general. Like if you think it's going up and to the right, I think, next quarter we could be talking about it and it's going to be like, back to $30. The fundamental problem is they are really not growing profitably. If you take out stock-based comp, yes. But if you add stock-based comp, they're just not a very profitable company. And stock-based comp is a huge part of the compensation for their employees. Without that, they couldn't maintain or control the employees. There have been some positive things. I think I've heard good things about the PlayStation 5 launch, surprisingly, but because it didn't really do well at all on Xbox. Again, this and AppLovin are hedge fund hotels, right? And so people come in and come out of these names like really, really aggressively. And so there are going to be very volatile stocks. And someone asked me, so should I go out and buy AppLovin? And I'm like, no, you should fucking not. Okay, don't do that, right? Go buy the VTI. As an individual investor, you don't buy this shit. You just don't. You sell if you have it, right? This shit's crazy. NVIDIA, sell. If you're an employee, sell your goddamn shares. Like, it doesn't make sense to hold on to this stuff. Anyway, all right.
Kress, you said multiple times in the last podcast that I was listening to, like you said, it's a Trump effect or something like Trump. How is the election of Trump affecting positively stock markets?
Oh, because less regulation.
Corporate tax rate cuts are what's expected. And so the industry is just, the stock market's like, it's,
foaming at the mouth.
Oh,
that's the word.
But
the challenge is, though, is if you look long term, people are expecting inflation to go up, because if some of the policies come to fruition, they could be inflation driving. But for right now, the market's on a sugar high, thinking that tax cuts, regulation's going to go down, as Kress is saying. So that's what's going on in the short term. In fact, Roblox stock from their earnings has been up 25% and has kind of been maintaining that, which is pretty interesting, despite the Hindenburg article from a few weeks ago where they called it the quote pedophile hellscape and things like that. They just didn't take that hit.
Wait, we have a macroeconomic expert on the podcast. I mean,
Mishka. Yes.
I mean,
no, Phillip Black.
I mean, you've been like pontificating this shit for like years now. So what's going to happen now with the background?
I'm off that train. I detoxed from The Economist, from Wall Street. I'm good to go. That's what I know. I'm asking you. So I'm all good.
But hey, to step back, I want to reiterate this point. Like Nina Khan specifically has been very, very detrimental to the exit strategies of a lot of tech companies, because big companies can't do acquisitions under her rule and her reign, right? It is very clear that Nina Khan is persona non grata for the Trump administration. And so she's going to be shit canned as soon as possible and replaced. And if that happens, like a lot of these issues with liquidity on VCs may actually be alleviated, particularly on the tech side. This does not really impact the gaming side per se, but on the tech side. So that could be good for all venture capitalists and all LPs, like in that business, if you can start actually selling companies, because Microsoft, Google, Facebook, Apple, they can't acquire shit right now, right? Because Nina comes after them. Sorry, I don't want to get too political, but and I think she has good cause to do so. I'm not really suggesting otherwise, but the reality of it is, without her, it could be better for tech in general over the next 4 years. So,
all right, hey Nina, time to go. We need to make some money. Like
it's worth clarifying that Jenny Vance is a known fan of hers. I think we should point that out.
That's true.
Before we state with certainty. So let's see how that goes down the administration.
So And
Yeah,
I bet
that's true.
Musk isn't a fan either. Anyways, she had a good run, but let's get juicy now. Like,
Enough about one royal kingdom. How about the other?
Oh, there we go.
So Royal Kingdom is launching the end of November. And so let's see if they're ready or if they're going to pull a Squad Busters. They've been in soft launch for quite a long time. They just announced a trailer. It's a very Supercell-inspired trailer that's kind of cute and adorable. I enjoyed it.
So if you look at just kind of currently what is the state of what's called the big four franchises in Match 3, you've got Candy Crush, let's call it the Scapes franchise with Gardenscapes and Homescapes. You've got the King franchise with Candy Crush Soda Saga and the original Candy Crush Saga. And then you've got Royal Match. And so what you'll notice is that all of these major franchises have their accessory game. They have their side game that they launched later on. Usually, as I would argue, probably like a CPI marketing play. A lot of the core mechanics are the same. And the only one that doesn't have that yet has been Royal Match, which has been interesting to see. And again, we should point out that Royal Match has been on an absolute tear when it comes to like dominating this market. And it didn't come at the expense of these other games. I think that's something that's really important to point out is that like Candy Crush Saga has had some of its best quarters over the last 2 years. And that game has been around since literally the birth of free-to-play, January 2013. So it hasn't come at the expense of all these other games, but it's been on a rocket ship like no other. In terms of cumulative revenue, after 51 months, Royal Match has done $2.7 billion, which is well far and above all these other franchises on a month since release basis. And it's still cranking out just around 350 million per quarter, which is just absolutely mind-boggling. And if you remember correctly, like this game is starting to incorporate more of the PvP elements. They've done some experimentation with translating some of that into PvE. They have a lot of the mechanics that we saw in the Clash Quest game where you have a series of enemies that you need to defeat. They have health. They almost function like blockers and you've got to make matches to take them down. I will go back to the piece that Laura and Ahmedjan had published beforehand, which is that they said that this game, the Royal Kingdom game, marks a step in the right direction for Dream's second game, but is unlikely to pop. Investing in one's strengths is the right approach, but Dream is the king of Match 3, but they still need to find a solid point of differentiation or unique selling point to have positive network effect and grow their audience through this other title. So they were a little bit dour on the possibility. I think it's hard to see this do anything less than a crazy number. I just a question of like, what is your expectation of how additive this is going to be to the portfolio? Would be my argument.
Yeah, because it looks very puzzle RPG when you see like the screenshot that you're showing on the screen. By the way, if you don't watch us on YouTube or Spotify video, we often share screenshots and charts if you want to kind of follow along and sometimes in what we're looking at. And so when you think about the puzzle RPG market, it is not nearly what you see in the puzzle market. So I think you're right, Phil. And I think what they said back then, this was a while ago that they wrote this, is probably still, somewhat applicable. But the good news is they're pulling it out of soft launch for a reason. So it must be hitting some of the KPIs that we're looking for.
And they seem to be like putting it in a very good time out because like if they're launching now, they probably would be scaling aggressively. In what I learned today is Q5. So Q5 is apparently this term that ad tech uses. It's the holiday season. It's between, 22nd of December to end of the first week of January, where people are off work and is spending more time on devices. And that is kind of like anomaly weeks during which you can really grow your game. And a lot of people are getting new devices. So they're installing a lot of apps and the spending is much higher. And it seems like this game is coming out right between that. So they are gearing up for pretty massive scaling during the holiday season. That's what I feel like.
Yeah. So a little bit of a challenge is there's something called, if you want to get into terming, the hard 8. So the hard 8 are the 8 weeks before the Christmas time zone, yes, which is the most expensive time to market anything in the world. And so it is always my advice to people to not, unless you are a AAA major game or you have a shit ton of marketing dollars, do not launch in the end of Q4 because you have to compete with share of time, share of wallet, and add budget with Call of Duty, with all of the other AAA games that are out there trying to get your attention and every other product and service that's trying to get you to buy them for the holiday season. However, what you just said is very true and something that we would do at Scopely and other companies is you want to launch your mobile game at the end of the year because you can capitalize on marketing that when everyone gets their new devices for the holiday season. They get their gift cards, they can start to make purchases. And so, yes, there is that time of the year once you get past Christmas or the other holiday, that you can purchase stuff. And when you get into January is like now this wonderful time to launch your games. And so here, what they're doing, in this time zone, I think they're going to try to like ramp up and hit that moment when they're really looking to scale. If I were to guess, is how they're thinking about it.
So this is their side piece game.
It has to be. It's going to be complementary. I mean, puzzle RPG, as we've talked about many, many times, is a very crowded market. It doesn't do nearly as well. It plays more mid-core than it does casual. The audience tends to be I haven't seen anything be casual in puzzle RPG that's actually worked. So maybe this is the first one that's going to try to do that.
Plarium had one game in this exact segment, kind of looked similar, and it failed as well in soft launch. They had it for probably like 2 years in soft launch. We have a deconstruction. I even forgot the name of the game, but they did a go. Similar, but it was more like Supercell-y, and like there were orcs and you were killing them with puzzles, stuff like that. So it's a tough one.
It's a tough one,
but nobody works harder at Dream. Like the stories I've heard, they work super, super hard, super long hours. It's like a hedge fund. It's a tough place, but they sure find success with all that hard work.
All right, everyone, that wraps it up for this week. Next week, we'll do a little earnings talk and follow up on everything else. See you next week.
More games next week. Less money talk. All right.
You did it. You made it to the end of the episode. As a fan of the show, it would help us out if you subscribe and leave us a review on the podcast service of your choice. More importantly, are you a member of the Deconstructor of Fun Slack group? If you have 5 years or more of games industry experience, go to deconstructoroffun.com/Slack and apply to join. Join the games industry's best professional community filled with peers always willing to lend a hand. Or subscribe to our newsletter to get all the latest insights from the Deconstructor of Fun content creators. Thanks for listening.